Aloha, everyone. It is a rainy Saturday in Lahaina. We have had a lot of rain this winter, which is very good for those of us on West Maui. And it's going to be good for those of you that want a long video. If you want a short video, my apologies. But there's actually a lot I kind of want to go over. First off, let's start with the market. As we know, on Friday, we had options expirations, hence the big, huge volume in the NASDAQ and the massive, absolutely massive volume in the New York Stock Exchange. Um, even though technically, it was options expiration, let's pretend that we live on an island. Not hard for me. And let's say I only have my charts. If I see that, I see that we actually have a distribution day on massive volume in the Nasdaq. We're fine on the New York Stock Exchange, on the S&P 500. Once again, big distribution day, churning day, whatever you want to call it. On the Dow Jones Industrial Average, big distribution day, but technically it's not a distribution day because we're not down 0.2%, but that intraday reversal off the highs, I think that pretty much tells you what you need to know about that index. And the Russell 2000, of course, also huge volume distribution day. Once again, near the upper end of that channel range that we're in. So it's way more risky to be long here. So it's just not surprising that we're moving down. However, I do know that a lot of people think that we're consolidating here nicely, and it does appear to be like that in a bit. Where as long as we stay above these lows and below these highs here, we're consolidating. Yes. However, it looked like that we wanted to break down. Then we had that big up day, and it looks like, oh, without a doubt, we're going to be hitting new highs in this market. That was too powerful a day, but we didn't get immediate follow through. And then after a lackluster up day on Thursday, we were followed by Friday's option expiration day, which now makes it appear like we want to move lower. Now, I know some people are like, well, how do you think it makes it look like we want to go lower? Because one of the most important sectors of this market had a very bad day. And we'll go look at the Ultra NASDAQ Biotechnology ETF first, because BIB. First off, before you look at the sell below the 50-day moving average, look at all the big, tall red bars in that before that happened. And look at BIS. It's the inverse of the biotechnology ultra short. Look at all the big accumulation bars. Now, since we're going to go over these, we might as well go ahead and go over the sells really quick. VASC is a 50% sell. You could do a 100% sell. ICLR is going to be a 25% sell for me. VRX is going to be a 25% sell. You could do 50% if you want. I want to see how these biotech stocks act around the 50-day moving average. ATRC is at 25%. You can make it 50. Jazz 25%. You can make it 50. SGMO 25%. You can make it 50. ALXN 25%. You can make it 50. But I want to see how these stocks react here. Now, let's say that on Monday BIS fails the 50-day moving average and even higher volume. That bodes very well for the market. Same thing with BIB. Let's say it has a reversal on even higher volume than options expiration. Awesome. If ALXN can get some support, awesome. However, until the highs of the days on Friday, which for this stock is 177.07, is eclipsed. Same with SGMO, same with Jazz, same with BIB. I'm right now in the camp that says the biotechnology stocks more than likely want to correct here. And on top of that, a lot of the speculative ones had pretty bad days. XON, as you can see, took out the 50-day moving average, and there were a whole bunch of stocks like INCY. You could see the weakness all over. I'm trying to figure out which ones are biotech stocks here. Maybe this one is too. But yeah, you can see that all these are breaking down even on heavier volume. REGN is a leader. So SHPG is one that I see on my list. That one's breaking down there. PBYI. So you can see all these heavy volume reversals below the 50-day moving average. Not good. And there's another leader, ILMN, NBIX. You can see that one, ALNY. That's not good. And on top of that, guess what returned to my long scans? REITs. Look at PSA, pocket pivot point buy signal. Look at WSR. Look at NLY. Look at IVR. Look at FRT. These are all real estate REIT or real estate related stocks. So these stocks are moving higher again. So whenever I see strength in these stocks, see weaknesses in biotech stocks, see more recent churning action come into the market, especially here, we were rallying a really low volume. Now, it made it appear at first that it was a healthy sideways consolidation. However, Friday happened. So there you go. So all of a sudden you're like, oh, okay, well, this is okay on the 18th. We're okay on the 19th. We're okay on the 20th. But guess what? Now we're not okay on the 21st, especially with the biotech stocks, IBB, breaking down. And once again, IBB, and you can see XBI, another biotech ETF. You can see the distribution leading before the crack. Now, we saw this back here in October. Like I said, we found support and we rallied higher. It would be nice if we do that, so we'll keep an eye out on that. But with this being the case, with the market looking like now it wants to go ahead and move lower again, especially with all these strong opens and weak closes lately. As you'll notice throughout this entire uptrend going into March, we've even had very strong weak opens, strong closes. And that was not the case on the 6th, on the 7th, on the 11th, on the 13th. Really, I guess you could say on the 14th and 17th, not on the 19th, and definitely not on the 21st. So we're starting to see the opposite action of what we were seeing. Even in our other pullbacks, like in October, you still had a lot more of those, reversal closings. Same in November, and even in January when it did start to look ugly, we had a similar thing. So you take what we saw in January combined with now at higher levels. I don't know. The one thing that we got to remember, though, is that, the Dow Jones Transportation Average is still confirming the Dow Jones Industrial Average, so there's no real divergence in the Dow theory there, so maybe it's just going to be a pullback. But the bottom line is I want to add another 5% to my SQQQ position. I know we're going in and out, in and out, in and out, in and out. We've been doing this all year long, but I'm telling you, at some point, whenever the sellers do overtake the buyers, this market's going to probably move very fast to the downside. And if/when it does, you're going to be very thankful that we add these hedges to go ahead to call off some of our long positions and build on our short positions so that we can profit. What's happened lately since 2008 is every time the market turns down, by the time I get short signals in stocks, the market is already oversold and we're constantly chop around. So the short side hasn't worked for me since 2008. So I back tested these inverse ETFs, or you can go ahead and use something like TQQQ short if you want. I just prefer going long. It's just instinctively something that I prefer to do. So I'm going to go long 5% in this one. But whenever it does take off, this thing could easily go to 52 to 86 very quickly. And our long positions are going to lose some of our gains, or going to lose losses. We cut our losses, and instead then of waiting for short signals and then being like, oh, well, it's too extended, we have to wait for a better setup, and then the market just moves too quick and we can't get short fast enough. By doing this hedging process, once we break wide open, we'll already be hedged against losses against our longs, and we'll be able to profit exponentially on the decline instead of just waiting for our what used to be 5%, 10% signals in shorts, which now got to be 2% because shit just doesn't work like it does. So speaking of shit not working like it used to, ZU, that's a failure. So ZU, we got to sell all of that. SORL, we got to sell all of that. JSO is a fail. We got to sell all of that. Data is a fail. We have to sell all of that. SEV is a fail. We got to sell all of that. Notice ZU, SORL, JSO, and SEV were all recent longs. Data was an even semi-recent long back in February. So with all these new longs failing, that means unless it's a perfect signal, I am now going back to new long positions being only 1.5% of my account capital. Intraday trade, listen, you got something that's moving and breaking out intraday on huge volume and you're on it, sure, I don't give a damn. 20%, 30%. I'm looking to go back into day trading full time to supplement the income that doesn't exist with this methodology anymore. Maui's a very expensive place to live. My methodology did very well for me here in my early days. Not so much now. Now we kind of need to start making some money a little bit faster. I see how we have to do it. It just means that my lifestyle has to change, and I've been really, really resistant to that. But yeah, if you can day trade and get the signals, great. 20, 30% per position on a breakout breakdown. Indexes, small stocks. I watch stocks in between 1 cent and $10 intraday and set up my lines, resistance, support lines, and wait for them to crack to short and wait for them to break out to go long. So it's whatever you want to do. Also, though, getting back to the sells, Trax at 25%, Tesla's at 25%. HRG is at 25%, just tons of sells. Camp is at 25%, another indication to me that something's wrong. All of these sells positions, including stocks we've had forever like Camp, including speculative stocks like, not speculative, biotechnology stocks, including the most amazing stock out there, Tesla, so I mean, you're getting sell signals all over the place, so, I've got to go ahead and take that, including a conglomerate, for God's sakes. A conglomerate is giving me a sell signal. So got to take that in with everything. So this market looks a little shaky here. Be careful, everyone. My apologies for those of you that didn't want a long video. You're welcome for those of you, some of you, wanted one. Aloha.